I haven't had the stereotypical uh image of wealth on the podcast just yet. And I've had somebody in finance, but he's really casual.
Hmm.
Beard, jeans, those kind of things. Like when someone thinks raising capital at a high level, acquiring, you know, extremely large assets, operating a business at a high level, you think, like the movie Suits, I don't know, a good head of hair and a nice suit and a good smile, and that is Rob Beardsley to a T. And so I'm excited for that. And I'm excited for this side of the country to learn more about you. And I know your ties are interacting with Arizona more and more, but to come from home base in New York out to Arizona, I'm glad that that's worked out. I have a hard non-negotiable, which is to do all of my interviews in person.
I
And
know it's a
so
good, very good choice.
I'm glad. I know that it's not always feasible in the case for a lot of people, but for me, if I'm going to do it, like I enjoy it more. And so the selfish side of me is like, hey, if I'm going to spend some time with Rob, I want to spend some time with Rob. I'll come to you or you come to me, but I'm glad this worked out from here. So, uh, Rob, with that being said, welcome to A Million Ways to Make $1 million, the podcast. We have Rob Beardsley with us today. I will let you describe how you would describe like what industry and space that you're in. If I were to do it, I would put you in the finance space because I have a little bit of an insight to how your business operates. You might occur for yourself more as a real estate guy or a syndicator or capital raiser or an operator, all of the above. But if someone asked you, Rob, what do you do for a living? What's your response?
Sure. Well, first off, James, thanks so much for having me on the show. Super excited to have a great conversation. And it's kind of the way that you ask this question is very funny because my mind starts thinking of all these different things. It's like, well, okay, yeah, raising money, operating real estate assets. But then another word comes to mind is therapist because it's like, you start building a business, you have all these people involved, and then you realize business is just people. And then more and more of your time gets spent dealing with the people side of things. So anyway, that's just funny how you get into business, whether it be in my case, real estate private equity, where we acquire institutional style multifamily assets in Texas. We have a vertically integrated operation with property management and construction management in-house, and we raise capital from primarily high net worth individuals. Like that's my elevator pitch. That's the whole thing. And that's what I got into business for. But then once I'm in it, then you realize, oh, wow, it's actually so much more than that. Like to my point about the therapist or dealing with culture, team design, or accounting, banking, HR, uh, all sorts of things. So it's definitely an exciting challenge that is so much more than just, oh, you're in finance and it's like you have a boring life or boring job.
Yeah. Tell everyone how old you are.
I'm 27, actually turning 28 in a couple days.
All right. So you listed out a good chunk of things there. You know, institutional level properties, raising capital from, high net worth individuals or groups. Like you're 27. Who's giving you millions of dollars and where did you come up with this idea to go buy some of the largest assets, in our country?
Yeah, I get that question a lot, as you could understand, because this is not necessarily like a young man's business, right? In the tech world, if you're in Silicon Valley, which is where actually I'm from, that's actually pretty common, right? You see young billionaires, you see people walking into an office and then walking out of a meeting with a, $500 million term sheet, right? But in real estate, it's kind of like, an old man's game type of thing. And you got to have the experience. You've been through the cycles and stuff. So definitely starting out, I actually dropped out of college when I was 21. Fortunately, part of the reason why I did that was I met my business partner, Kent Petrikovsky, and he's 17 years older than me. He has a 12-year career as a tax attorney and had some real estate experience on top of that. So he filled in a lot of my gaps. I filled in a lot of his gaps, which naturally is the ideal partnership. So we fed off each other and gave each other kind of the confidence that each other needed, right? And that led to my dropping out of college and him leaving his job, right? I mean, people say it's bold for me to, drop out of school, and I was studying computer science and all that stuff, but he had
You're 21.
he had 3 kids, mortgage, wife, like whole life, and he can't afford to go wrong on that risk. So I give him all the credit in the world, and it's kind of like I looked at him being willing to do it, and I thought, well, if he's willing to take this risk, I need to be willing to take this risk. So that's kind of what kicked us off. But really, to answer your question, I think a big thing between him and I was just the fact that we were naive and we had this confidence due to ignorance. It's like, well, how hard could this be? Let's just go for it and let's get started. And we kind of had the right mentorship in our corner telling us, hey, if you're going to do a deal, don't go and put a $5 million deal under contract, which even that's big. But, why don't you do a 15, 20, and so on, right? So our first deal was actually a $15.4 million acquisition, 261 units in Houston, Texas. And we didn't know what we were doing at all. And it was just off to the races from there. And pretty soon we realized just how difficult it is to raise money, which you can appreciate. I'm sure a lot of your listeners can appreciate as well. Anyone who's hasn't tried it, they think, oh yeah, well, I'm sure if I have a good deal or if I have a good idea, I could find the money, right? But it couldn't be further from the truth. Once you actually get into the business of raising capital, you realize that that's kind of the last piece of the puzzle, right? Nobody really cares about the deal. They care about you. They care about the trust, the relationship. So it was a rude awakening, and we kind of pounded our heads against the wall and felt so much rejection and just overcame it and just did it through brute force and got that first deal done. And then that was my wake up call where it's like, okay, you know what? Yes, I want to be in real estate. And my passion isn't sales, marketing, talking to investors, taking someone out to lunch. Like those aren't my passions per se. But I realized that there is no real estate passion without the money, right? So it's a means to an end. It's a necessary evil. And so that's why instead of neglecting it, I dove in head first and made it my mission to not make this be a barrier to us. So that kind of got me the idea to write my first book and wrote my next book because I know being young, I need to make up for a lack of trust. And so by being an author, by speaking on stages, by doing podcasts, just by being really well researched and knowing my numbers, right, that helped me overcome the things I was lacking.
Yeah, just to your compliment, and I say this authentically, is that I have yet to find a group as well educated and versed in your niche as you and your team. And it's not just you, it's your team. You exude expertise. Like you exude, we put our 10,000 hours in of learning this, and it goes deep. And sometimes it's even intimidating. But like for me, I love spending as much time as I have been able to recently with your team because I feel like I learned something new that benefits our business anytime. And that's to your credit of, I call it response blocking. Right. If people are going to look at us like a bunch of young guys, like what they won't be able to say about us is that we don't know what we're talking about. And we will show you that if you spend some time with us. For the people listening to this right now that are trying to connect the dots, you're 21-ish in college, and all of a sudden it's like, we're going to go buy a $15 million asset. Like connect the dots. You mentioned computer science. Like you were on a certain path. Can you give us like a little insight on what veered you off of the current path that you were on?
Yeah. So to tell you the full backstory, like I mentioned, I grew up in Silicon Valley. So I was surrounded by a couple influences, one being the tech, startup kind of ecosystem, but also my family. My parents ran a residential brokerage firm in Silicon Valley. So I was exposed to the real estate business through my family and then exposed to tech through kind of my surroundings. And it it was a bit of a tug of war or something because my parents did not glamorize their business at all. If it was actually the opposite, they said, "Oh, don't do real estate. Real estate's really hard. We're struggling. Look at our neighbors who are crushing it at Facebook, or they started a startup and they're getting funding and all this exciting stuff. Like you want to go do that." And so they pushed me in that direction, and I didn't argue with that. And so that's why I ended up going to school for computer science, thinking that I would do a startup or I would go into consulting or something of that nature. So I had that real estate kind of background and upbringing with my parents, but again, it was on the single family side. So my parents, for all the real estate transactions they did, and my dad's an expert in construction and has built homes and they did rehabs. For all that, the only asset that they ever owned was their primary residence. No rentals, no portfolio, no commercial, nothing. And there was just a block there. It was a mental block or whatever block it was. And so I never saw that. And so what I saw was them actually just chasing commissions, churning and burning, and kind of just basically having a not a business, but a job that kind of business that ran them sort of deal. And that's obviously wasn't attractive to me. And so I had that seared into my brain and kind of that fear of, okay, well, I don't want to be, chasing after commissions or, chasing after salary. I want to build assets. I want to build long-term wealth. I don't want to have to like do a fix and flip type of thing and like get all the timing right. Like if you look at, the way Warren Buffett invests and the most successful people, right? It's like the long and slow game and slow and steady and things like that. So that kind of attracted to me to multifamily because it was very similar to single family. It's just, 1 unit to 100 units. But the dynamics are very different because now, like you mentioned, we're talking about institutional assets and taking a different perspective on things with risk mitigation, with long-term investment mindset and those sorts of things. So basically all these thoughts and research came to me while in college because I was getting antsy in school. I'm like studying and, school's challenging for sure, but I was thinking like, what's next? I grew up playing football. I was a quarterback in high school and I was very used to doing school all day, go to practice, then do homework at night and just be a grinder, right? Like football is another job. And then I got recruited to play football in college, got to school, and I felt this nasty pit in my stomach. I couldn't even eat food. I became physically sick because I knew in my heart that football was no longer my passion and it was no longer going to serve me by playing in college. It was going to be, knowing me, it's not going to be a 20-hour-a-week commitment. It was going to be more, and I was going to dedicate my life like I do to my passions, and I just couldn't see the ROI of doing that for 4 years in college because I wasn't going to go pro. So that I made the tough decision to quit, basically like on the spot, and then all of a sudden I got back like 30 hours a week of my time. And so I'm just thinking, okay, well, what do I do with all this time? I'm getting antsy. It's time to make money. And that's where I started researching real estate because it's, in my opinion, it's the best path for wealth. And so, yeah, that's kind of when I got all these ideas, got the bug, started talking to my parents about it. And they definitely supported the intellectual curiosity, but they definitely did not support dropping out. So that notion came a little bit later. But yeah, that kind of connects the dots a little bit as far as my background in real estate and then going off to school, getting the bug. And then that just led me to consume every podcast, read every book, attend local events, go to conferences, and then at a conferences where I met my business partner. And that's when him and I just started talking every day, kind of building up a more legit plan.
Why would somebody 17 years older than you want to partner with you?
Well, I mentioned, it's a great question. I get that one a lot too. So I mentioned how we complement each other and we filled each other's gaps and we gave each other the confidence that we needed, right? So it was obviously pretty clear what he was bringing to me, right? Which is, okay, he's got the age, the experience, a degree, right? An attorney. And so that complemented me being young and lacking those things. But for him, what he lacked was definitely the time. All right, he was time poor. I was young, ambitious, hungry, still am. And
you've got at least 30 hours now extra. Exactly. Plus, if we get this other school part out of the way.
Yeah, so I approached him very humbly and basically just like, I get it. I understand my position and I'm willing to work to compensate and, prove myself type of thing. And I think that's one of the reasons why our relationship has been so successful is that because we're so different in age and background, we have so much respect for each other. It's almost like, it's kind of a weird concept how sometimes we treat strangers better than we treat family. Like when you're so close to someone, you almost treat them worse because you're just so familiar. Well, because we were so not familiar with each other, it was just like very respectful and never get into arguments, never get into any disagreements really. And so we've carried that through our entire relationship. And so, yeah, basically it sounds kind of simple, but definitely he was time poor. And so I was willing to just overcome the barrier with work. And then another big piece that became more and more apparent as we grew was I'm an introvert, but I'm okay kind of talking to investors, going on camera, going on stages. He's actually, funny enough, maybe more extroverted than I am, but you will not catch him dead in front of a camera, right? So he doesn't want to be on stage. He doesn't want to be well known. He doesn't want to be posting on LinkedIn, none of those things. So it became very apparent that, okay, I never envisioned this for myself, but I'll push myself to the forefront. He will go, stay in the back just as he likes. And that's worked out super, super well for us.
Yeah. Take me to now. You meet at a conference. I'm assuming it's in the multifamily space of some sort. Where do you start the business plan? Like, who's going to go find this asset to acquire? How did you get to Texas? Where are you going to raise the money from? Like, how did that all come together?
So, good thing about real estate is that you can do a deal. Like you and I could partner on a deal, a single deal, and that doesn't necessarily mean that we are partners for life. I mean, ideally we are, but real estate has a transactional nature to it where you do an acquisition or you do one deal and you're not necessarily married. And so when we first got together, we weren't laying out this master plan that, okay, well, we're going to build a business, we're going to, be partners for the rest of our lives. It was just, okay, you know what? Let's help each other, try to advance our careers, and let's take it deal by deal. So it wasn't until actually kind of through the first deal experience where we kind of had shared trauma of the first deal and we kind of realized, okay, you know what, let's make this legit, let's formalize this, and let's actually build a business. Prior to that, it was really just, let's do a deal together, let's work together, let's divide up the time and the effort. He was already in touch with a lot of brokers, sourcing deals. I am good with numbers, and so I built a underwriting model that we still use to this day that we've analyzed thousands of deals with. And so that was kind of our balance. Like he would kind of source the deals, talk to brokers, do some due diligence. I would crunch the numbers. We would discuss, and that was the starting point because when you're starting, your assets under management is zero. And so all you're doing is really acquisitions, right? All these other responsibilities are yet to come. So that's how we divvied it up, and we kept it very simple. And I think this is actually a good thing because it's very, very difficult to find a good partner. It's harder than finding good employees, and that's already super, super tough. So finding the right partnership is really tough. So that's why I encourage people to date before you marry and take things slow, one step at a time, rather than trying to get all ambitious and excited and lay out a big business plan and say, okay, well, we're going to do this, we're going to do that, because you just really don't know how things are going to evolve.
How would somebody learn how to underwrite a property? You mentioned you're good with numbers. Like, is this YouTube University? Is this underwriting for dummies? Is this paying for mentorship guidance courses? Like, where did you learn enough about underwriting to build a model to feel confident in the numbers?
I don't think my process was necessarily orthodox or optimal, but I think it definitely works. I think the high level takeaway is that it's not rocket science. You just have to have a desire, and you got to be diligent. And so learning it is pretty straightforward. I just started sourcing deals, getting financials, and started looking at other people's models and their analysis and saying, okay, well, let me trace through their formulas and why did they calculate it this way? And why does this spreadsheet calculate it a different way? And I started learning by doing all that, and then started taking my favorite pieces of different models and putting it into my model. And then through the process of looking at deals, I would get feedback from brokers, lenders, investors about my underwriting and also about the model itself, and then just continue to incorporate that feedback into a positive loop of constant improvement. So and we're still improving the model today and tweaking it to make it better. So it was just the desire to not accept status quo, not just be like, it was actually, it's funny because my dad is very smart, but this makes him sound really smart. And I feel like this was just kind of like a hunch of his because way early on, I asked him, like, okay, well, it's time for me to underwrite. I should just download a spreadsheet online to just start using. And he said, no, you're going to build your own. And I don't know why he had that premonition almost, but it was one of the best pieces of advice he ever gave me because it led me down this path, which ultimately led me down the path of writing my first book, which is about underwriting multifamily acquisitions, which, marries nicely with the spreadsheet that I built. And so the spreadsheet's been downloaded 15,000 times by people online for free. The book has sold 20,000 plus copies. And so those are tools that people use every day to analyze deals.
What was his concept there? Don't go buy your first car, build your first car, and you'll appreciate it more, understand it better. Like, what do you think? Like, what was why you're going to build your own?
I think he did think about it as a learning experience. Yeah. But I should ask him if he even remembers. I don't know what gave him that strong opinion.
Yeah. So now you're looking at a $15+ million asset. You and your partner have $5 million to $7 million liquid to acquire this.
So yes, we had to go out and raise 4.5 million.
Okay.
And
I hope that to not be too confusing, but for an audience of like, well, how did he buy a $15 million asset? Like, you're what age at this point?
I think I was 21 still.
Okay. So you're 21. Your partner is extremely liquid. You guys just have the $4.7 million together.
I wish, but then we wouldn't have learned anything.
Yeah. So like, that's what I think I meant by that question was like, how does this happen? Okay, you found a multifamily property for sale. You're going to go buy it now. How do you do it?
Yeah. So you're making it sound hard, but in reality, it's even harder than that. It was so hard. And there were so many things that we didn't even realize that would be obstacles. Like, for example, before even raising the equity, we had to line up the debt. And it's kind of the same situation, right? How do you convince an investor to invest maybe $100,000 or $1 million with you? Well, same thing. How do you convince the bank to lend you 10 or $15 million, right? And in multifamily, it's more common that the lender is lending to you based on the property's financials, but still, they're still looking at you as the borrower from an experience standpoint, from a net worth standpoint, liquidity standpoint, and those are tough. Those are impossible things to have when starting out, right? So we didn't even know that, and we didn't know that we would have to go source a loan guarantor in order to be able to get this deal off the ground to begin with. So that was a major struggle and a tough lesson learned because it caused unforced errors. And that's a big thing that we learned in that deal is there's things that you want to have set up before you actually have the deal live rather than the thing I always say is you need to dig the well before you're thirsty. And we did not do that. We just totally bought into the myth that, if we find a good deal, the money will come. But the money didn't come, right? It was a grind. So getting the loan guarantor is a big challenge. And then on the equity side, to your point, convincing investors to invest with young, first-time owners of multifamily property it was very, very tough. So there is no silver bullet. There's no magic answer I can share on the podcast, but definitely partnering is obviously key. Being humble and willing to give away as much of the deal as needed is the name of the game. I would tell myself, even though I would kind of take on these paper cuts or just these kind of tough deals, if you will, I would tell myself, it doesn't matter if we make no money on this deal. What matters is getting it done. What matters is building the relationships, building the credibility, the experience. It's, I could be in college otherwise, right? Just studying in class. Instead, I'm getting paid to actually learn in real life. So my business partner and I, we drove our entire networks, asking his, he had a better network given that he was an attorney in New York for 10 plus years. And so we were able to raise some money from his network. And then my family, it's really been way more valuable than I ever anticipated. But because my parents ran a brokerage firm and they bought and sold luxury homes for their clients, turns out we knew a lot of people with capital. And so then I was able to get introductions, sit down meetings, Zoom calls, phone calls, and drive that network and then ask for referrals. And just every day I woke up and it was just like, okay, who am I meeting with? Who am I on the phone with? Who am I emailing due diligence questions back and forth with? And that was it. And even that wasn't enough. Like, we closed and we had to keep delay the closing because we didn't have the money, borrow money, beg the seller. It was ruthless, it was brutal. And then we closed, still needed to keep raising money for like 6 months after. So it was just
This is typically meant to be a 90-day close as
right.
well, right? So when you're saying extend, like you're trying to raise $4.7 million inside of 90 days, roughly.
Yeah, I mean, the groups that do it right and the way that we do it these days is, we're trying to have the fundraise happen in 60 days, right? And that's at that point when you have a well-oiled machine. Back then, we didn't even know we needed a machine. We just were like, oh, investors, they're just the afterthought. Like, the deal is what we're excited
I
about.
found it. They will come.
Right.
Yeah. Like you alluded to the advice of giving like on a bigger deal. I imagine somebody listening would just think, why not just go buy like a 40 unit and raise $1.7 million? Like, could you speak on the benefit of what I would call jumping in the deep end right away?
That's a great question. I think that the simple answer is momentum. So, and it goes both ways. Because let's say you and I want to start a business and, hey, let's buy a deal. But you know what? Our mentor told us to go big or go home. So we're going to turn down all deals less than 20 million. We're only going big. And if that causes you and I to have paralysis by analysis, or we're gun shy and it takes us forever to do our first deal, then that's a mistake, right? You need to build the momentum. So to your point, if the 40 unit deal, that's $1 million raise, gets us the momentum we need to then eventually, faster buy the $20 million deal, then that's the right decision. So I think it just depends on a person's business plan, depends on what your prospects are. I think the challenge with raising capital is it's very, very difficult to get a sense of how much money you can raise from your immediate network, because you kind of ask people, oh, would you be interested if I had something like this? And most people in your network are going to say, yeah, I would be. But push comes to shove, it's a totally different situation. So while it is true that on your first deal that you ever do, you're going to get a bigger pop, because the people that they don't know anything about the deal itself or anything, but they just like you, they just trust you, they're gonna go in, right? But then that's the first deal. You're only going to get that first pop once. So you need to be able to be ready to actually, like I said, build the machine and have a pipeline growing. So yeah, I think whatever builds the momentum faster for you and kind of where you are today would be the right answer to dictate the size of deal you should pursue on your first one.
Yeah, I geek out a little bit on the financial side of this. Not, I wouldn't call it the financial, the capital raising side of this deal. Is it fair to say that there were plenty of people in that first deal that were just betting on you and your partner?
100%.
I mean, it was just relationship equity.
Yeah.
And oftentimes that's a smaller check size than maybe they are able as a vote of confidence or faith. Is there anything that you guys lent on specifically to push those first few investors over the edge?
I think tactically you mentioned the smart choice of basically leveraging the partners in the deal and their experience, right? So selling not necessarily yourself, but saying, okay, well, the property management company that we're partnering with on this deal, they actually have equity in the deal, and this is their track record. And now it's kind of like I read a funny, it's this newsletter about economics and stuff, and he's talking about how, yeah, between me and Taylor Swift, we have millions of followers, right? So it's like between me and our property management partner, we've managed thousands of units. So all of a sudden, I've got all this experience by virtue of the partner. Same thing with the loan guarantor. Same thing with even the lender saying, okay, well, the lender is approving of the loan and of the deal terms, and this implies XYZ. And then on top of that, what also speaks loudly is other investors, kind of like having an anchor investor sort of thing. So we didn't have like any one big anchor investor in that first deal that brought in a ton more people, but we did have, I would say, smaller anchors and smaller people who we're willing to go through the process of due diligencing us as a no as an unknown commodity, and then due diligencing the deal, and then being willing to go to their network of investors and say, hey, I'm going to put in my 100 grand, do you guys want to come in? And then of course we're giving a cut of the deal to that person. It's our first deal, so we'll do anything, we'll do what it takes to make it work.
I'm just curious if someone could take away like this guarantor chose to believe in you, the property management company chose to partner with you. That one might make a little bit more sense because they're going to benefit from managing the asset as well. But anything that you would think that first guarantor saw in you guys that gave them a vote of confidence to join the team?
Yeah, it's actually something that I wanted to mention earlier because we talked about the negatives associated with youth and inexperience, which I'm not trying to deny by any means, but I think that actually in some ways it worked, it has worked in my advantage, because when you have especially like older, more successful people that I come into contact with, it's like they, maybe it's they see a younger version of themselves in me, or they just like the ambitious energy or that kind of thing, right? I'm sure you can feel that and have experienced that in your own life. So I think as a younger person, when you're showing up to the table with the lack of experience, you need to make up for it 10x in terms of your energy, excitement, ambition. And I think the people that got on board, they saw that. And it's like, okay, this is cool. This is something that is exciting to be a part of, and I can overlook the age and inexperience because of those positives.
I think it's fair to say, like, if we compared it to like a team drafting a prospect, it's like, man, I'd be willing to invest in this prospect because of his work ethic, intangibles, athletic ability, whatever. You might not be this polished franchise player today, but I'm willing to bet on that horse, so to speak. Is that a fair assessment?
Yeah. Yeah. I mean, I wasn't in their shoes, right? I was on the other side, just hoping they would take a gamble. And now that I've been through that experience and have a little more of my own experience, I just look back on that and I think, wow, those people were crazy, right? Because now as I think about who I would potentially invest with, it's like, it's such a scary thing. And so, yeah, it's humbling. I'm very grateful to be given those opportunities and have made the most of it. So yeah, it definitely, like with anything, going 0 to 1, getting something off the ground is always the hardest thing.
I think it's to your testament. I speak a lot about who you're being has such an impact on creating a lasting, business or experience or, you know, yeah, as much as anything, who you're being gives people a vote of confidence. And, I hope that you documented that time, of that, I think one, you can pick your head up 6, 7 years just blows by. And now you fast forward and I'm at your office in the heart of New York City in what just feels like this contagious energy. Can you tell people where your office is at?
Yeah, so we have an office at the One World Trade Center, and like you mentioned, we host every year our big Lone Star Capital Summit. We call it the LSC Summit, and you were there, so I can say this confidently. We bring the best and brightest across the country to gather together, to network, to share, and it's a super, like you said, contagious energy, super good energy.
Yeah, there's one, it's like Fort Knox to get into it. Like the security, like, am I in the right spot? How old is Rob? Where, like, who's his dad? Like, who, like, all of this, like, almost, and I'm as optimistic as they come, but you had to have faced this curiosity around how you've been able to do this. Like, how did you get this office? How is your team this big? How are you acquiring this much? Can you speak to how you've dealt with what could be this irresponsible assumption of how you've generated what you've generated?
Yeah, it's interesting when you put it that way. It's funny because when we're living it every single day, it's just like a grind. And, getting that office was so tough. And we were touring various office spaces downtown. And then that one came up and we were like, oh, it's kind of pricey, but this would be really cool. And I think it would be beneficial from like a marketing branding perspective. Let's pull the trigger. And then going through a months long due diligence process basically with the landlord to be approved to move in and, sign a 5-year lease. And it's just like brain damage of just fingers crossed, hoping and trudging and getting through things day by day. But yeah, when you just kind of zoom out and it's like, oh, well, Rob's got this big team. Everyone's in a suit and tie. You got the One World Trade Center. It's like, it sounds pretty sweet, but yeah, the day to day has, it's like anything else. It's just a grind. So to your point though, my family I have the best parents in the world, super supportive, but unfortunately they're not super rich. So I do get that accusation sometimes, but we just laugh about it and we just kind of brush it off and we flip it on its head because people accuse that, so to speak, as if it's like a bad thing. And we joke about it and say, you know what? I wish my dad was worth 100 million. What do you mean? Like that would be amazing. So we just make a laugh out of it.
Yeah. Could you speak to somebody that is contemplating keeping their bottom line as minimal as possible and going for the cheaper office space that might make more sense on a month-to-month basis for the current position of the company versus taking that jump into a higher expense and what the benefits of that could be?
Yeah. I mean, this is maybe like nerding out or zooming into on like a very granular decision, but basically my decision making process on that was obviously looking at our current financials and then looking at our prospective financials and then thinking about how our business could be augmented by the office space. So we're looking at, just to simplify the equation, it's like, let's say, normal office space costs X, and then this was 50% more expensive. So it's 1.5X.
Let me paint this picture while you're there, and I don't want you to lose momentum, but just to give everyone some insight, and maybe we can take some pictures. I'm staring at the Statue of Liberty out one window. I'm watching the helicopter tours. I'm seeing the memorial out the other side of this 360 glass view. I mean, it is as an impressive office space as I've been in. Like it's great, and I want people to hear that because that has to be considered an asset of some sort. Like it's very difficult to what I would call fake the experience that we got when being in your office. So sorry to cut you off, but I want people to just get an experience of why I'm so curious about this decision.
No, yeah, that's very helpful because you're kind of proving my point because basically, like I'm saying, if office space costs X and then this is 1.5X, I need to justify that 0.5X. And the way I justified that 0.5X is I thought about, okay, what could this mean for external branding, such as what you just described, right? Getting people in the room and then having them have that experience. What could that mean for us? Could we raise a little bit more money? Could we, whatever, you can kind of crunch those numbers and figure out what that might mean. And then internally, what does it mean for our ability to recruit and retain talent, right? Because while New York is the deepest talent pool in the country as far as, the best employees, best, talent, they've got a lot of options, a lot of choices as to where they could work. And so being a young, dynamic company like ours in a Class A, name brand office space like this, that can help with recruiting, getting A players. And that's kind of a whole other conversation. That's something I'm super passionate about, which is hiring A players and having a big team and having the right people on the team. But that we could talk about later. So it was kind of the external branding, the internal recruiting and retention. And then finally, the cherry on top is kind of, what do I want my day-to-day to look like, right? At the end of the day, this business is not about, yes, of course, business and jobs are all about making money, but that's not all that it's about. And also, what is the money for, right? You don't, when I flew here from New York, I didn't fly in a bag of money. I flew on a plane, right? Like the money is to afford a flight. The money is to afford the nice office, the whatever it is that you want. And so my business partner and I just thought about it. Well, we want our day-to-day life to look like, coming to an office that we would enjoy coming to and be proud to come to and that we could grow into as well, not get the office space that we can, afford and feel happy with today. And then 5 years down the road, it's like, oh, well, this is, not for us anymore.
Yeah. Any negative effect to such a space at like for the tenure of the business? Any feeling of irresponsibility around that, whether that was just behind closed doors between you and your partner, or a pessimistic COO, or or whatever, a CFO, whatever it may be, a team member that you value their opinion, like anything that you had to overcome that way?
Nothing too crazy. I mean, I laugh because my business partner is like the older conservative attorney, and I'm like the young ambitious guy. Like, what could go wrong? And which is funny because in our relationship, I'm the optimist, but in kind of general, I would say I'm maybe more centered, sometimes pessimistic. But anyhow, yeah, my business partner would sometimes kind of like look at me and kind of be like, "You're crazy," or like, "This is your fault," like, "You got us into this mess." But no, I think overall it's served us incredibly well.
Yeah, I think that I wouldn't want to get lost in it, but I think that there's such a deep rooted principle, and I would put that in the marketing budget of just having the confidence of that risk in itself, of betting on yourself, doubling down, so to speak, and then paying attention to being able to convert on it, rather than just loosely like, oh, it'll work out. Great office space, the money will just come flowing in. It's great, but I think that if I had you for an extra hour or two, I think that I would peel back, and maybe that could be a conversation for another time around, you know, throwing events, you know, publishing a book, spending money on the podcast, those kind of these expenses that are sometimes hard to quantify up front, but how they can really create some momentum inside the business.
You should have seen our first LSC summit. It was in my apartment building. So my apartment building had like a third floor amenity space, and it was nice. I mean, I'll show you the video. Like, it still looked good, but just the way everything was done and the venue is just incomparable. So we knew that hosting events was in the cards, and that would pay dividends. And we knew that we would build out a podcast studio in the office, and we would be able to attract high profile or high quality guests to build relationships with, to do podcasts in our office. And so, you start crunching numbers that way. And if you, like you said, you can't just do it and then just expect that everything all works out. It has to be very proactive, and you have to make the most of it, right? It's an opportunity, and now you have to actually go and execute.
Yeah, yeah. Tell everyone now what this year is going to look like for Lone Star Capital. There's a number I have in my head that you guys told us, like, hey, this is our benchmark. This is what we're looking to acquire in assets on an annual basis right now. And there's certain benefits with lenders as a result. But tell us where Lone Star Capital is today.
So today we own and operate a portfolio of around $700 million in assets across 22 properties, over 5,000 apartment units in Texas. 2025 is, like every year, going to be a super exciting year. It's crazy that already a month or so has gone by. But this year is going to be exciting for a couple of reasons. One, we are planning to expand into a totally new market, which is Phoenix, Arizona. So I'm sure that's exciting to you. That's exciting to many. And that's going to be a big step for us, being Lone Star Capital, but now becoming a regional player rather than just focusing on our Texas markets. And that's going to provide diversification to our investors who have invested a lot with us in, concentrated bets. Now they can get some diversified exposure. So that's exciting, but we're not going to rush it. So that might not even happen this year, but it's an initiative that we're putting in place. To answer your question about, targets and goals, big thing is every year we set an acquisition target, that really drives the business forward. You got to get everyone excited, got to get everyone moving in the right direction. And so this year, the goal is to acquire $250 million in assets, which would put us pretty close to $1 billion in assets under management. Now, that's fun and exciting, and I love goals. I mean, every morning I write my goals down every day. I write what I'm grateful for, and I think just putting your goals down is so important. But with that being said, one of the things that makes this business and this goal in particular of our business very unique is you can't force it. It's like meditating and trying to get into the zone. Like, you can't really, force it. It's got to just naturally come. And the reason being is because you got to take what the market gives you. And so right now, we've seen the market be very slow. Towards the end of the year in 2024, we had interest rates go up a lot. We had an election. Obviously, we had the holidays, and rates have stayed high. So things have just been very slow. And so there's not a ton for us to look at, not a ton for us to do. And I literally just told this to our director of acquisitions the other day. I said, our job it's just as important what we buy as what we don't buy, right? And so that is just as much our job. And when we're looking at deals and we're kind of scratching our heads going, gosh, we haven't bought a deal in a while. Like this one looks okay. It's like, no, we need to stick to our guns, stay patient. Like, yes, everyone wants to buy a deal. Yes, everyone wants to make a bonus, but we have to understand what the long-term vision is. And, buying the wrong deal is infinitely worse than, buying a deal today.
Yeah. Yeah. Why $250 million? Is it to get you to that $1 billion mark? Like I remember a conversation that seemed it attracted me to your group, and now it is initiative of mine to invest alongside you in one of these deals, whether it be Phoenix or in your current market in Texas, because of some of the advantages of borrowing at such a high scale. Could you tell people, like if someone was looking to place money into a syndication deal with you, what are some of the advantages that are going to come from you guys growing at that pace or buying at that scale?
Sure, absolutely. Yeah, the 250 comes from a natural progression. 2024 we acquired around 190 million in assets. So, 250 is just it's a nice round number, and I think as we've scaled, we are adding capacity, meaning we have more capability to find good deals, to execute good deals, and to raise the capital, right? You're constrained by three things in our business. You're constrained by deal flow, you're constrained by capital, and you're constrained by, I call it throughput or human capital, right? Because you go buy a bunch of deals, well, guess what? You've got to spool up the machine. I mean, we're hiring 2 people plus per week right now because we're spooling up the machine of, maintenance people, on-site staff, leasing agents, regional maintenance, construction teams. So, you can't snap your fingers and just have all that together. So as we've just continued to beef up operation, the capacity is there to acquire 250 million, which then, in my opinion, gives us access to better deals. That's something that we're very passionate about and continuously kind of reframing or redefining what that means to us. So for our investors, the important points, you kind of hinted at this, and this is something that is super exciting, is as we grow and become more of like a regional or institutional owner operator, we get access to enhanced lending terms. And so that would be potentially available through Fannie Mae and Freddie Mac, through those special borrowing programs. And so that would give us a competitive advantage, which is only available if you're doing a certain amount of annual business with those entities. Those are government-sponsored enterprises. So that's exciting. That's a real big goal for me. But in general, just to kind of give people more information about syndication, because a lot of people don't even know what that is, right? In our space, or maybe in your day-to-day, we kind of assume, oh, well, of course everyone knows about commercial real estate investing and depreciation and 1031 exchanges and stuff like that. But I guess just to give the quick high level, what is amazing about our business is we, through the power of syndication, which is coupled with, the 2012 Jobs Act, which is not that long ago, that's 13 years ago, which legalized and formalized the ability to issue these private placements and raise capital, which effectively disintermediates all these private equity firms. And, like you think about a teacher's pension fund, like CalPERS, California's teacher's pension, like that's the biggest investor in the country. And it's like, those are teachers' pensions. That's an individual. Then that gets kind of pooled together. Then they go invest into a Blackstone opportunity fund. And then Blackstone becomes an LP into a sponsor like us and does a joint venture. So it's like, look at all the layers to eventually benefit the end beneficiary, right? So with us, we're able to, just like you, raise capital with groups like yourself, but also directly with individuals. And they're able to invest directly with us, disintermediating that process. And they're not investing into a REIT or a stock. So they're actually getting real estate ownership, which is critical from a tax perspective. You got, like I said, depreciation, 1031 exchanges. And also, one of my personal favorite things about investing in real estate is the illiquidity. And a lot of people who are familiar with the investing world think of illiquidity as a bad thing and think about, oh, well, this stock is liquid. That's a good thing. And I challenge that because I'm human. I'm sure most people listening to this are human too. And therefore we have emotions, and emotions cause us to wake up one day and go, oh, I want to sell my stock. And you sold your Bitcoin when it was down, right? You made that wrong decision. And, or Bitcoin's super high, it hit 100K. Everyone's excited. Everyone's talking about it on Twitter. I'm going to buy Bitcoin at 100K. Maybe that won't work out. So unfortunately, human psychology causes us to buy high, sell low, and act capriciously, but you can't do that with an illiquid asset. So I love the assets that we own and the equity that I and our investors have in these deals, because we can't succumb to our emotions and, one day wake up and just sell it, because as you know, selling a real estate asset is a 6 to 12 month process.
Yeah, man, I love that concept. That is something that I will earmark and I will use. Thank you for sharing that. That's such a unique insight. I think that oftentimes when people are raising capital and might have something that could be a 3 to 5 year hold, they're looking for all these ways to like justify why that's a positive thing. And like, I know that there's other options that have a 6 month hold or a 90-day, liquidity period, whatever it may be. I love the concept of sometimes protecting us from our natural emotions. Like, man, that was so well said, and I hadn't heard it put that way specifically, and I'm going to use that a lot. I think that that's great. If I had to issue a challenge to not use any of your existing contacts or LP base, and you had to go raise $1 million in the next 30 days, what would you do?
I think I would cheat, but I think I would definitely go. I would cheat because I would just go to somebody who has those contacts, right? And I would just pound the pavement for someone. It would be easier for me to find that one person who knows 10 investors to raise $1 million, rather than me try to find those 10 people individually and cultivate the trust to invest, in 30 days. That's really tough.
I would hate to hear someone think that that's cheating.
Right. Yeah.
Yeah, like just, I think that oftentimes I just don't know anyone that has that kind of money or who's going to give it to me. And like, man, for your mind to go right to that person that is already in that space, that is already transacting with investors or people looking to place or grow secure capital, whatever it may be, and work on that, the likelihood of transacting in 30 days is really likely. And I just want people to hear that, like that your mind operates in a different level from optimism, efficiency, and possibility. I had a conversation recently around, man, if I can just see that it's possible, if I have one gift, it gives me this silly amount of confidence that I could also do it. That's why I don't ride motocross with some of my good friends, because if I watch them do something, I will have this strange confidence that I could also do that. But in our world, seeing somebody like you put $190 million worth of acquisitions in place in a calendar year, it's like, wow, it's possible. How is he doing it? And I hope that people could hear the way that just, I didn't ask you that question previously. Like, what do you do? And it's like, I don't know. Like, your mind skipped. Oftentimes it takes longer for 30 days just to get the money over, so I'm not going to spend time doing that. I'm going to go right to the source. And I hope people could hear that from possibly going to raise capital to get a new venture off the ground or whatever they maybe. But I believe that raising capital is one of the greatest skill sets in our country currently. And if you can do it, it'll be to everyone's benefit. And man, Rob, I know we have other stuff on the docket today, and I hope that we could have you back to share more of what's going on. But to summarize, in roughly, is it safe to say under an 8-year period, we've gone from, I think I'm going to play football on a daily basis, to I'm not, to I might not go the traditional Silicon Valley route, but there's some gold there too. Growing up around that environment of what's possible. 22-year-olds getting written $300 million, checks and in confidence in their concept or idea. Like it sounded to me, if I took a theme from this, is that you spent time with people that had a certain amount of optimism and a certain mindset around creation. And that through, you know, good old fashioned work, viewing what your strengths and what your current currency that you could offer would be and capitalizing on that, creating a business plan, what's possible. And that there's something really special around this 7-year mark. As I'm spending time interviewing more people that are guests on this show, there's something so special around this 7 year. Like first year, it's like I did it, I made it, like we're alive still. And in year two is like, okay, we've got to improve some things. In year three, it's like, oh, we're a real business, like we're here, like, and then man, you can really create some momentum and generate real amounts of wealth in this 7 year time period. And I wouldn't want people to hear that as it's easy and all you need to do is put 7 years. Like I can see it in your eyes. I know that there's a certain pressure that comes of being a steward of that much money and an operator. And what people don't know is that you left this beautiful apartment and beautiful office building to go live in one of your own apartments recently to ensure that a property gets off the ground the way you would have it and to, force this appreciation, so to speak. I'm using that maybe a little out of context than we would traditionally use it, but man, I just appreciate the way that you do life and business from a confidence standpoint. Like I still have limited experience around you, but the experience I do have is that storms will come regardless, and you're just going to weather them. And we have big goals, and we're going to tackle them the same way anyone else would. And I think that it exudes confidence, and I hope more people get to know you. I think that you've recently deleted social medias, and I'm not happy about it. I actually sent you a DM the other day, and you're like, "Hey, that wasn't me." Um, I hope that you keep stepping outside of your shell because the world needs to learn from more people like you, in my opinion, and you have a lot to offer. And I know I would benefit from content that you produce. And with that being said, even though you deleted Instagram, or whatever it may be, where could people find you now?
So the best place to learn more about myself and Lone Star Capital is to go to our website, lscre.com. On our website, there's a bunch of great free resources. Like I mentioned, the underwriting model that's been downloaded countless times, and links to the books and other free resources. We're coming out with new stuff that's super exciting. So yeah, definitely encourage people to go take a look at that, and then if they want, they can get in touch from there as well.
Yeah, send us off with our youngest of listener that has high ambitions. Like if you could speak to just 21-year-old Rob right now, whether it's just like a pat on the back, you got this, or hey, maybe don't do that, or do more of this. Like, do you have like a reflection standpoint now being at this side of those last 7 or 8 years?
I think there's plenty of mistakes for sure. And the big one, I think, at that age is you've got all this excitement. And I certainly did. And I couldn't wait. And I just had to do something, had to get started. And I think that there's so much value in action because, on the one hand, people get caught up. And like I have young people reach out to me and they're like, how do I learn this? Or my plan is to go work here and spend, 6 months or 2 years or 5 years learning that, and then I'll do this. And then I always think like, no, just do it now. Like if that's what you want to do that now, because I promise you the experience that you're looking for is not needed over a 6 month period. Like you could do it faster and you could just learn on the job. So I think some people need to hear that message, but what I needed to hear was the opposite. It's like, hey, I know you want to do everything today, but you don't need to. Take your time. You'll make less mistakes. Think things through. Like that's really, I feel like, the difference between me now and that and back then, which, I'm still too young to be giving my old self advice. Like I need to be taking this advice. But the way I think through challenges and problems and decisions today, it's like, okay, yeah, there's a little more step of due diligence. Like I'm not just going to hire that person because they charm me in an interview. Like I'll call the reference, I'll think about it, I'll ask them the question that I don't want to ask them because I'm scared to know the answer. Like, those are the things that I'm more ready and willing to do that I wasn't when I was younger.
Yeah. Thank you so much for your time. I'm excited to spend a little bit more time over the next couple of days while you're here, and more importantly, looking to see what you build here in Phoenix and from an acquisition standpoint, and looking to be a part of it. Thank you so much, and
Thanks so much for having me on the show.
thanks.